Hey everyone, welcome back to the channel. Today we are diving headfirst into a story that's been making waves across financial forums and social media. A massive alleged $2.5 billion silver purchase. Is this the real deal, a calculated risk by a major player, or something else entirely, a potential financial trap? Let's break it down and see what's really going on. First, let's get the story straight. The rumor mill has been churning out claims of a colossal silver buy, supposedly made by a single entity or a coordinated group. The figure, $2.5 billion, is staggering. To put that into perspective, at current silver prices, that's enough to buy hundreds of millions of ounces. If true, a purchase of this magnitude could theoretically send shockwaves through the entire silver market. But here's where we need to apply a healthy dose of skepticism. The first question we have to ask is, where is the evidence? In the world of finance, transactions of this size rarely happen in the dark. They leave a paper trail. We'd expect to see unusual activity in COMEX futures contracts, massive inflows into silver ETFs like SLV, or reports of huge physical bullion deliveries. So far, concrete, verifiable proof of this single $2.5 billion transaction is incredibly elusive. We're seeing a lot of chatter, a lot of forum posts, and a lot of speculation, but not the hard data you'd expect. This lack of transparency is a major red flag. It makes you wonder if this is more of a financial fairy tale than a market-moving event. So let's play devil's advocate for a moment and assume the purchase did happen, but maybe not in one big, obvious transaction. Could it be a series of smaller, coordinated buys designed to fly under the radar? It's possible. A sophisticated investor or institution with deep pockets might try to accumulate a large position without alerting the market and driving up prices against themselves. This is a common strategy known as accumulation. They might spread their purchases across different exchanges, use various brokers, and mix physical buys with futures contracts. But even with this stealthy approach, a $2.5 billion position is so large that its effects would eventually become visible in market data, like a large ship creating a wake. We should see persistent upward pressure on prices or unusual patterns in trading volumes over time. While we've seen volatility in the silver market, attributing it to this one specific, unconfirmed event is a leap. Now let's consider the motivations. Why would someone want to buy so much silver? Well, there are a few potential reasons. Some investors view silver as a hedge against inflation. With governments around the world printing money, the value of currencies can erode. It's a critical industrial component used in everything from solar panels to electric vehicles and 5G technology. As the green energy transition accelerates, a savvy investor might be trying to front-run this demand surge, anticipating that prices will be much higher in the future. And then there's the more speculative angle, the idea of cornering the market or triggering a short squeeze, similar to what was attempted with GameStop. The theory goes that if a large enough group can buy up the available physical silver, they could force the price up dramatically, putting pressure on institutions that have large, short positions in the paper market. This is the narrative that often gets the most attention online. It's an appealing David versus Goliath story. However, the silver market is vastly larger and more complex than the market for a single stock. It's a global market with huge inventories and powerful institutional players. Attempting to corner it is an incredibly ambitious and expensive undertaking with a very high risk of failure. This brings us to the risks, and they are significant. Let's talk about the idea of this being a financial trap. Who benefits from spreading a rumor like this? Think about it. If you can convince a large number of retail investors that a whale is about to make the price of silver explode, what happens? They rush in to buy, creating a surge of demand. This is often called a pump. The price goes up, not because of a fundamental shift, but because of hype. And who cashes out at the top? The very people who may have started the rumor in the first place, selling their positions to the wave of eager new buyers. This is a classic pump-and-dump scheme. The latecomers who bought at the peak are left holding the bag when the price inevitably crashes back down. The lack of verifiable sources for the $2.5 billion claim makes it a perfect vehicle for this kind of manipulation. It creates a powerful sense of FOMO, fear of missing out, which can cloud judgment and lead to impulsive financial decisions. Let's also consider the nature of the silver market itself. It's notorious for its volatility. The price can swing wildly based on economic data, geopolitical events, and even simple market sentiment. It's also a market where the paper price, determined by futures contracts, can sometimes feel disconnected from the price of physical silver in your hand. This complexity can be confusing, and it's an environment where misinformation can thrive. When you hear a simple, exciting story like, "A billionaire is buying all the silver," it's tempting to believe it because it cuts through all that complexity. But often, the simple story isn't the true story. So, what's the verdict? While the idea of a massive $2.5 billion silver purchase is exciting, the evidence to support it as a single, confirmed event is currently weak to non-existent. It's far more likely that this is a combination of market chatter, wishful thinking from silver enthusiasts, and rather than making panicked decisions based on hype. So, when you see headlines like this, always ask yourself, who is telling me this? What is their evidence? And who stands to benefit from me believing it? By approaching these claims with a critical mindset, you can protect yourself from potential traps and make more informed decisions for your financial future. The story of the $2.5 billion silver purchase is a fascinating case study in how information and misinformation moves in the modern financial world. Stay skeptical, stay informed, and always do your own due diligence. Thanks so much for watching today. If you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the stories moving the markets. Let me know your thoughts in the comments below. Do you think the purchase is real? Let's discuss it. Until next time, take care.